Good morning, traders. It is Monday, October the 7th. Taking a look at the charts, we've got the SP 500 daily chart. And you can see here we got this red moving average. This is the 200-day moving average where price is starting to really kind of bounce off this level and hold its ground. But at this point, with the 200-day moving average so close, once it starts to break down and we see the market start to break some of these lows, these significant lows here or this low back in June, you could argue that we are in a bear market with the market breaking down and trading below that level. So with this 200-day moving average getting closer and closer to price, and price just keeps kind of squeezing on and holding ground there, we're very close to something very big and ugly to the downside if price starts to give way. Now, if we take a look at the price here of the SP 500, we are still in an uptrend, and the key here is to either, if you're going to get short the market on some type of a correction, it'll be very short-lived, usually only lasts a couple of trading sessions, a few trading sessions, and then the market goes into this sideways chop, which we talked about last week. The market did exactly just that. It sold down for a couple big days, rebounded back up from that oversold territory, and we are expecting it to likely chop around for a little while. So it's had a huge knee-jerk reaction rebound. I got some emails last week, people saying, I think the bull market started again, we're back in an uptrend. Well, the reality is we are more or less in a downtrend, and really we're going to be stuck in this sideways range wherever this top fizzles out this week, potentially up here at this 20-day moving average through here, but we're going to be back in this range. And the key here, because we're in a bull market, you don't really want to hold short positions. You're good for the first initial bout of selling, but after that you need to rotate to where there's going to be an asset class that trends. And if we were to just add a symbol in here and go TLT, which is bonds, and we look at the price, you can see what TLT has done. So in a time when the stock market traded sideways in this chatter, we saw TLT, this blue line, take off, and it was in a nice strong rally mode. And of course, when the stock market over here is in a strong rally mode, we see TLT flatline. So we are back into this point here where the market is starting to get into a big range. TLT has already started to move higher, and we could continue to see this trade higher going forward. So we are in this for a trend trade while the stock market chops around and debates whether it's going to break to the downside or break to the upside. And that's where we're at. We're in bonds trying to catch this trend going higher. Now let's go take a look at some other asset classes. If we take a look over at gold, gold's down 0.6%. Again, gold, silver, miners, they're still in a downtrend. And if we look at just basic analysis, we've got lower highs, we've got lower lows in the market. It's channeling down, came all the way up, tested these levels. It's starting to reverse down today. We could easily see miners continue to consolidate or potentially just start to trade sideways for a while and build some type of basing formation. If we look over at silver, down 0.5% today as well. Again, it's had an oversold bounce, and the question is, are we going to start to carve out a bottom here, or is it going to continue to pull back? Now, overall, miners and metals have got this nice run higher. They are in what is a bull flag consolidation still, so no matter what, it could consolidate down here. It's still very bullish long term for the next major leg to the upside. But we just got to let the market work itself out and not get too excited, just like a lot of people did over here. They piled in long, and then of course they get washed out and panic out down here, and then they start to do the same over here. You got to let the market just do its thing. It's not about trying to get in at the bottom, get out at the top, or it's about getting in and trying to catch this middle kind of safe zone, this rally mode, this bull flag and consolidation phase. And when things start to get overdone and you get to these major resistance areas, this blue line we had on the chart for almost a year probably, it got hit, huge washout, exhaustion top, everybody piled in, and then it reversed back down and it's stuck under that level still. So we want to catch this middle section and get out and let the market do its thing, and we try and catch the next middle section over here. Let's take a look over at miners just so you can see where those charts are as well. Gold miners, nice rally up. They are consolidating, having a multi-wave pullback. They had some pretty good life yesterday, Friday, but overall still channeling down into the right. And I am bullish on them long term, but short term, not interested in getting in them just yet. Let's take a look over at charts to see, or bonds, so you can see where bonds are. Bonds typically rally, consolidate. This is a pretty big range that it's in here, but overall, I'm expecting it to continue to consolidate. Hopefully, we're going to see it push higher, but it is in a fairly big range compared to this other range over here, which was a much more narrow range. But when you get into these bigger ranges, breakouts can be equally as large. So if the stock market does start to roll over and break down in a big way, we're going to see bonds really explode to the upside yet again for another leg higher. Looking over at energies, natural gas down 1.7%. Yesterday started, sorry, not yesterday, Friday started to show some signs of life. More or less, we got this oversold washout. I watched it take place, and then we saw this really strong rally. And then the following day, we saw it push up higher, pull back, and end up closing fairly strong on the day. Overall, my big concern is it's something like this right here. Very similar type of price action. It gets oversold after a huge sell-off from way up in the charts. You have a quick oversold kind of short covering squeeze, and then it goes down and pokes to some new lows, and then eventually forms some type of short-term basing formation, which usually you see a couple different levels form, more or less. That's kind of what we're looking for. Potentially, this would be the top of a more significant basing formation, and then maybe it forms some other little basing formation somewhere down in here. But we see price start to work itself down and put in some type of bottoming formation, and this level across here would be a really significant potential breakout zone to the upside. Looking over at crude, up 1.55%. Again, oversold at long-term support. Just look at this chart across here. This is a really strong support zone, and overall, big reversal wick there for an oversold bounce. Overall, not a huge fan of the crude chart, but it is bouncing, and we could see it work itself back up to this next resistance area on the chart. This blue line here. It was a pretty critical line in the sand before, starting to get a little wash through though, but overall oversold at this point. We'll see where the market gets into resistance. Actually, the 54 looks like a more of a key resistance area. If we look at this area, we've had lots of trading through here, pivot high, consolidation, couple pivot lows, a breakthrough, a pivot low, consolidation, consolidation, another pivot, consolidation. So overall, this could be actually the short-term reversal area where if crude puts in a reversal, then it could very easily go right back down, test these lows, and if it breaks these lows, then we're going back to likely the December lows, which would be down here around this 45, potentially 42, 50 area. Anyways, that is about it for today, and I will talk to you in a little bit. Bye-bye.